On February 14th, we saw the latest read of CPI report, which came in at a higher than expected 6.4%, above the consensus estimates for a rise of 6.2%. Now, initially, the market's reaction was mixed. The data was somewhat difficult to interpret for a couple reasons. Despite the increase in year-over-year inflation, the month-over-month reading was more in line, and the core year-over-year, with food and energy stripped out, was closer to being in line. In the immediate aftermath of the numbers, some analysts and economists began disputing that the flaw in the CPI reading is and has been a failure of an adequate reading in rents, as the owner equivalent rent portion operates as a significant lag, and it doesn't accurately reflect the current condition. Two-year yields, which initially moved lower on the data, proceeded to spike dramatically higher to 4.6% in the first hour of trading. But 10-year yields lagged again, moving that 2s versus 10s spread to a new low near negative 86 basis points. The inversion seems to be telling us that the Fed may be forced to accelerate its tightening in the near term to fight what appears to be persistent inflation, but that ultimately the data may prove to be lagged and perhaps not as accurate an inflation read as the Fed hopes. If a trader believes that the move higher in yields could continue, they could express that by buying the February micro 2-year Treasury yield futures contract at 4.51 and targeting a move back to the cycle highs of 4.72. The stop for this trade could be placed below at 4.35. This trade can make $210 if your target is reached and risks $160 if you're stopped out of your level. Now, if a trader believes that the spike in 2-year yields could be met with selling and that yields could fall from here, they could express that by selling the February micro 2-year Treasury yield futures contract at 4.51 and target a move to the February lows of 4.10. A stop for this trade could be placed above at 4.81. Now, this trade could make $410 if your target is reached and risks $300 if you're stopped out of your level.